I'm back again with a video. In this video, you'll learn how to treat revenue nature item when funds are created related to such items. Let me read a note first. Treatment of items when specific funds is created. Sometimes certain specific funds such as match fund, sports fund, prize fund, etc. are created by not-for-profit organizations for a specific purpose. These organizations invest these funds in securities and earn income on them, but the income earned on such investments is added to the concerned fund and not credited to income and expenditure account. In the same way, expenses incurred on such specific purpose are also deducted from the concerned fund. To explain you this, let me show you an example. This is the example of a club and the information is related for the year 2016-2017. During the year, the organization created an environment fund of 6 lakh rupees. Then it made an investment of 4 lakh rupees from the fund at the rate of 7% interest. During the year, the organization incurred an expense on environment awareness movement. The amount was 1,50,000. Then during the year itself, the organization received a donation related to the environment fund, an amount of 75,000. Then interest was received at the end of the year on the investment which was made. The amount of interest was 28,000. Now, this information, if we have to show it in our receipts and payments account, will appear like this. The information would appear as 6 lakh rupees will be shown towards the receive side. Then 4 lakh rupees, which is an investment made from the fund, will appear towards the payment side of the receipts and payments account. 1,50,000, the expenses which was incurred, will appear on the payment side. Then the donation which was received for the fund will be shown towards the receive side, and the interest which was received will be shown towards the receive side of the receipts and payments account. Now, when we show this information in our income and expenditure account or the balance sheet for the year, then we will show it in this way. The environment fund will be shown towards the liability side of the balance sheet of the year end, and the environment investment will be shown towards the asset side of the balance sheet. The donation of 75,000 will be added to the fund because the donation is related to the fund, and the income of 28,000 which was received from the investment of the fund will be added to the fund, but it will not be shown in the income and expenditure account towards the income side. It will not appear towards the income side, though it is a revenue nature item, but even then it will not be shown towards the income side because this income is related to the fund. So it will be added to the fund and it will not be credited to the income and expenditure account. The expenditure of 1,50,000 will be deducted from the total value of the fund. That means including all the income and the donations, the total fund comes to 7,03,000, and the expenses which was incurred on environment awareness movement will be deducted from the fund because this item is related to the fund which is created. So it will not be charged from the income and expenditure account. Normally this is a revenue nature expenditure. If a fund is not created, then we would have debited to the income and expenditure account towards the expenditure side, but then this has a fund, so in that case we will not show towards our expenditure side, but it will be deducted from the fund. And after the deduction, the balance of 5,53,000 will appear as a balance of the environment fund at the end of the year in our balance sheet. Now, what we have to understand here is that when the organization creates a fund for a specific purpose, then in that case, any activity related to the fund, for example, an income related to the fund, will be added to the fund and not charged and not taken to the income and expenditure account. And if there is any expenses incurred related to the fund, it will be deducted from the fund and it will not be charged to the income and expenditure account. It will not be shown as an expense in the income and expenditure account. Let me show you another example. Now in this example, we have the information for 2017-2018 of an organization. The organization during the year had created a Poor Girls Education Fund. The amount of the fund is 15 lakh. Then the donation which was received during the year at the end of the year, during the year was 2 lakh rupees related to the fund, and the expenditure which was incurred on Poor Girls Education during the year was 20 lakh. By looking at the information, the expenses of 20 lakh is more than the total value of the fund. That means 15 lakh plus 2 lakh, which comes to 17 lakh, which is lesser than 20 lakh. So 20 lakh is the total expenditure, but the total fund value is 17 lakh. So the fund is short by 3 lakh rupees. There is a shortage of 3 lakh rupees. Now this 3 lakh rupees, which the fund cannot meet, will be charged to the income and expenditure account of the current year. So it will appear towards the expenditure side as Poor Girls Education expenses. So this is how you will show it. To expenditure of Poor Girls Education to 20 lakh towards the expenditure side. Then you will deduct the Poor Girls Education Fund from the total expenses. Then you will also deduct the donation which is received towards the fund, 2 lakh rupees, and the balance amount means the excess expenditure will be shown towards the expenditure side of the income and expenditure account. So I hope you are clear with this concept. Thank you.